The Internal Revenue Service, or IRS, is facing a critical challenge, a shrinking budget and a dwindling workforce. Over the past decade, the agency has seen its funding and staffing levels significantly reduced. This decline in resources has serious implications for the IRS's ability to effectively carry out its core functions, which include providing taxpayer services, enforcing tax laws, and ensuring the smooth operation of the tax system. The IRS plays a vital role in the U.S. economy. It is responsible for collecting trillions of dollars in tax revenue each year. This revenue funds essential government programs and services that Americans rely on. However, the agency's ability to fulfill this crucial role is being hampered by its shrinking budget. With fewer resources, the IRS is forced to operate with a smaller workforce and limited technological capabilities. The consequences of these cuts are far-reaching. Fewer IRS employees mean longer wait times for taxpayers seeking assistance, whether it's answering questions about their tax returns or resolving payment issues. Additionally, reduced staffing levels limit the IRS's capacity to conduct thorough audits, particularly of large corporations and high-income earners. This lack of scrutiny can lead to a decline in tax compliance and a loss of revenue for the government. The IRS's shrinking budget also hinders its ability to invest in critical technology upgrades and cybersecurity measures. As the agency increasingly relies on digital platforms and systems, ensuring the security of taxpayer data becomes paramount. However, without adequate funding, the IRS is vulnerable to cyber attacks and data breaches, potentially compromising the sensitive financial information of millions of Americans. The long-term consequences of a weakened IRS are significant, potentially undermining the integrity and fairness of the tax system. The impact of IRS budget cuts and staffing shortages is acutely felt by taxpayers. Longer wait times for assistance, both over the phone and in person, have become the norm. Taxpayers seeking help with complex tax issues or requiring guidance on specific tax law provisions face significant delays in getting their questions answered. This can be especially frustrating for individuals and businesses trying to meet tax deadlines or resolve tax disputes. The decline in IRS staffing has also led to a higher incidence of errors in tax processing. With fewer employees available to review tax returns and verify information, mistakes are more likely to slip through the cracks. These errors can result in inaccurate tax assessments, leading to taxpayers either owing more than they should or receiving smaller refunds than they are entitled to. Correcting these errors can be a time-consuming and stressful process for taxpayers. The reduced capacity for audits, particularly of wealthy individuals and corporations, raises concerns about tax fairness. With limited resources, the IRS is forced to prioritize its audit activities, often focusing on easier-to-audit individuals and small businesses. This creates an uneven playing field, where those with more complex financial dealings and greater resources to exploit loopholes may face less scrutiny. This perception of an unfair system can erode taxpayer confidence and compliance. The strain on the IRS's resources also affects its ability to provide adequate taxpayer education and outreach. With fewer staff and funding, the agency has had to cut back on programs designed to educate taxpayers about their rights and responsibilities. This lack of education can lead to taxpayers making mistakes on their returns, failing to claim deductions or credits they are entitled to, or becoming victims of tax scams. An informed taxpayer base is crucial for a well-functioning tax system. In an effort to compensate for staffing shortages, the IRS has increasingly turned to automated systems for tax enforcement. These systems are designed to streamline processes, improve efficiency, and free up human resources for more complex tasks. While automation can offer some benefits, such as faster processing times and reduced human error, it also presents potential drawbacks that should be carefully considered. One concern with automated enforcement is the potential for errors and inaccuracies. Automated systems rely on algorithms and data analysis which, while generally reliable, are not infallible. Mistakes in data entry, coding errors, or unforeseen circumstances not accounted for in the algorithms can lead to incorrect tax assessments or penalties. When these errors occur, taxpayers may find themselves in a bureaucratic maze, struggling to correct the mistake and prove their compliance. Another issue is the lack of flexibility and empathy inherent in automated systems. Taxpayers facing unique circumstances or experiencing financial hardship may find it difficult to navigate a rigid automated system. The absence of human interaction and discretion can make it challenging to explain extenuating circumstances or appeal unfair assessments. This lack of empathy can leave taxpayers feeling unheard and frustrated. Furthermore, the reliance on automated enforcement raises concerns about data security and privacy. The IRS collects and stores vast amounts of sensitive taxpayer information, and the use of automated systems increases the risk of data breaches and unauthorized access. Safeguarding this information is paramount, and the IRS must prioritize cybersecurity measures to protect taxpayer privacy and prevent identity theft. The consequences of a data breach could be devastating for taxpayers. The long-term implications of a chronically underfunded and understaffed IRS are significant and far-reaching. As the agency struggles to keep pace with its workload, taxpayers can expect longer wait times, more errors, and a decline in the quality of service. This erosion of trust and efficiency can have a ripple effect throughout the tax system, impacting taxpayer morale and potentially leading to decreased compliance. A weakened IRS also hampers the government's ability to effectively collect tax revenue. With fewer resources dedicated to audits and enforcement, there is a greater risk of tax evasion and fraud going undetected. This loss of revenue can have serious consequences for funding essential public services, such as education, healthcare, and infrastructure. A robust tax system relies on a strong and well-equipped IRS. The decline in IRS funding and staffing also has implications for tax policy and administration. As the agency's expertise and capacity diminish, it becomes more challenging to implement new tax laws, address emerging tax issues, and provide guidance to taxpayers. This can lead to confusion, uncertainty, and a lack of clarity in the tax code, further eroding taxpayer confidence. In conclusion, the IRS's shrinking budget and workforce pose a significant threat to the fair and efficient administration of the U.S. tax system. The consequences of these cuts are felt by taxpayers in the form of longer wait times, increased errors, and a decline in service quality. Addressing this issue requires a commitment to adequately funding the IRS and ensuring it has the resources and personnel necessary to fulfill its crucial role. Failure to do so will have lasting consequences for taxpayers and the integrity of the tax system as a whole.